market. That was quite telling and crunching pressure throughout.
And to think that we actually started 100 points higher in the morning on the Nifty and then to end 300 lower. I mean, oh boy, that's that is a
quite an intraday fall,
Absolutely, it's a reversal. 400 point, by the way, swing from the day's high on the Nifty. So was quite something. And I think primarily the big reason at the margin was the relentless rise in the US dollar. I mean, we woke up to about a 0.5% rally on the dollar last night. And then it went, the dollar index, which is, I mean, a broad measure of what the dollar is doing against other currencies, it went up another 0.25%. So through in the Asian trade in about 4-5 hours. And I think that was a big reason why you had, relentless selling. So almost 106 now is where the dollar index is trading at. I'll just put two levels here without going into much in terms of detail because it was broadly all down. I mean, I think sectorally, except maybe real estate, the index which ended higher and IT which did not fall much, everything else was down between a 0.75% to 1.5%, most sectoral indices. So on the Nifty, I think you're basically now looking at the 200-day moving average. A lot of sort of back and forth debate, bickering about whether, but you're eventually now there. I mean, on another 300 points and you are at the 200-day moving average. That level stands at about 23,530, 540. And for the Nifty bank, in the very, very near term, supports lied, and I put this in the morning as well, 50,500 for the Nifty bank, which is the lower end of the range. And the bank Nifty has been range bound for a while. So, I mean, those are a few points on board before we go further. Surabhi.
Oh, yes, absolutely. Well, if there's some comfort, maybe it's in the fact that we weren't the only market falling today. Actually, beyond Wall Street, a lot of other global markets are now off the so-called Trump trade. Look at what happened across Asia. The Hong Kong market was down 3%. The mainland Chinese market, the Shanghai Composite, was down about 1.5%. Singapore was down. So there was red across our neighborhood. So that's small comfort, if at all. And even when we were trading, a lot of European markets were dealing with cuts between 0.5% going up to almost 1% on the French CAC. So it was a bit of a global situation that we were dealing with as well. Having said that, something stands out, and that is the fact that absolutely no sign of buyers in any pocket, no pocket of strength today. Let's start with looking at some of the PSU indices, because whether it was a Nifty PSC index, the PSU bank index, or the CPSC index, all of them were leading the fall. So big crunching down day for a lot of the public sector enterprises. But even beyond, I mean, pull up the rest of the heat map, whether it's autos or IT or pharma. I mean, like I'm saying, nothing was standing out. Banks were under pressure on the private sector side as well. So not too many gains to speak of, really. That was the extent of the fall. And the other sort of negative piece that we have to report is the fact that mid caps had a much worse day than the large caps as well. The fall was wider in the broader markets. If you look at the advanced decline ratio, quite negative. I mean, you had just about 530 stocks advancing, and look at that, almost 2,000 stocks on the declining side. So whichever way you look at it, not such a great day for the bulls. We'll talk about this in more detail as we go forward. Here's the lineup that we'll have on the show. Vivek will go over the blow-by-blow account of this fall that we looked at today. And then we get to earnings tracking numbers from Jubilant Foodworks. That was actually a bright spark, rallying in today's otherwise weak market. Britannia faced a lot of pressure following the conference call. Ramco Cements under the spotlight as well, with the good numbers coming through. So we'll tell you more about it. And then finally, we get to some of the key earnings left over for tomorrow and the other events to watch. But first up, over to Vivek to track all the stock-by-stock action of the day. Vivek, over to you.
Well, thank you so much for that. Like you mentioned, very few bright spots, but quite a few stocks, mainly earnings-led, that did see some positive moves on the back of either good results or good management commentary. First on the list has to be Jubilant Foodworks. In the broader end of the market, a clear outperformer, strong internals. Management alluded to very good Q3 demand as well. That's come through almost 5.5% higher. The other stock, from the auto ancillary space was Minda. Whole host of auto ancillary companies have actually seen a very weak set of results, but Minda delivered a strong Q2, EBITDA up almost 20%, almost 9% higher today. Triveni Turbine came out with the results last evening. Very, very strong order book that the company has done, and also delivery is something that the management has done in terms of Q2 margin performance over there too. Almost 3.5% uptick today. Ramco Cement, a clear outperformer as far as the cement pack was concerned. The entire cement universe was very, very weak, but Ramco Cement outperformed over there, especially in terms of volumes. And lastly, UPL. Yesterday, a very weak set of results. Yesterday, the stock was down almost 7%. Today, post a management call yesterday evening, did see some upgrades coming through. Management has guided for a strong H2, stock higher by almost 2.5%. It did give up quite a bit of the gains. But now coming to the list of stocks, the significant sell-off. Yesterday, amongst the list of losers, we had highlighted, Britannia almost 5% down yesterday. Today, another 7.5% down. Very, very sharp sell-off as far as Britannia, and that took the entire FMCG pack down as well. Asian Paints, weak management commentary amongst the top nifty laggards yesterday. Today, another 3% down tick over there. Jyoti Labs, again, a muted Q2. Domestic volume growth at just around 3%. 8% lower for Jyoti Labs. Intraday was when the management delivered the Q2 results. And lastly, Bosch, will deliver its results later today. But ahead of the results, the stock was down almost 5%. Whole host of selling pressure across most sectors today.
Absolutely. And Vivek, thank you very much for outlining that for us. So more down than up. And that ratio was some 4:1. Jay Bala is with us of cashthechaos.com. Gurmeet, Chadha of Complete Circle Consultants is also with us. Gentlemen, thanks very much, both of you. Gurmeet, another drubbing today at 300 points gone. What's your sense? I mean, what's the big driver here?
So, Prashant, seems like the strong dollar trade hurting emerging market asset prices. I think the markets are probably sensing what happened when President Trump came in 2016, where the Chinese currency depreciated around 10% because of the tariffs and reverse tariff wars, and China lost a lot of foreign exchange reserves at that point of time. So I think there's a bit of rub-off happening there. I think we are impacted more because as a house, our earnings have been very disappointing. I think today it was Britannia. Every day we have literally an accident. It started with the FMCG majors like HUL, Nestle talking of urban slowdown. Then came numbers from some of the other consumer companies, and today was Britannia. So I think the earnings have been weak, and I think that's adding to the pressure. I think the FI flows remain, the outflows remain unabated. So I think near term, I think even if you see Nifty one mid cap, let's say 150, the 1 year return is still 32-33%, and this is when earnings are not that great, right? So while it may look that the markets have corrected at 10%, but considering the earnings we have, the valuation is so I think we are probably moving to a stock picker market now. And in the near term, I think the bond yields and the dollar index pressure has to come out to reduce this selling pressure. So that's something we will be looking out for.
Okay, Gurmeet, I mean, good you brought up that point, because let's start there. Let's understand the macro situation first, and then we'll get down to stocks and earnings for the day. And the currency has been in sharp focus, not just here in India, but around the world as well, because the dollar index continues to soar. In fact, it's now creeping closer and closer to the 106 handle, leading to a lot of weakness in Asian currencies. We've got Lata joining in to explain this to us and what this means for the Indian rupee, which has also been facing plenty of pressure. Lata.
Well, it's home bias. It's so clear that U.S. equities are having an advantage, both probably in terms of taxes and in terms of tariff protection. So there is this huge rush back, and it's going to be negative. The rupee has been hitting a new low practically every day, and today as well, in sync with almost all other Asian currencies. Today, the fall, if you take the Thai baht, it's fallen almost 0.8. The ringgit, other currencies, anything between 0.25% to 1%. The renminbi, of course, is the one that we track most closely. For obvious reasons, India has a huge current account deficit with that country. It is the second largest economy. So the renminbi has fallen from 7.1 to 7.23 from the pre-election date to today. And you can see, give or take a bit, a similar direction. Now, obviously, the dealers also sense that since we have a big current account and trade deficit with China, as the renminbi cheapens, the Reserve Bank will allow the rupee also to cheapen. China itself probably wants that depreciation. At least that's the market's guess, because that's one way to cheapen your currency and make your goods marketable, even if there are tariffs. So, PBOC wants the currency to depreciate, Reserve Bank wants to depreciate. That's the mood in the market. That really, there's no stopping, but that doesn't mean the Reserve Bank is not intervening. There is talk that they've probably intervened to the extent of $1 billion today. But such is the force with which people are buying dollars and legging it out of Indian assets. There are, of course, even trading positions, long rupee positions which are getting squared off. No one is calling a bottom just yet. Not for the renminbi, not for the rupee.
Okay, all right, Lata. So that's telling it as it is. Thank you very much for that perspective. So perhaps maybe more weakness ahead. We don't know where the bottom is. With that, now let's turn the sort of the dial back to equities and a lot of the individual stocks that were in focus today. Starting first with Ramco Cements. We're starting with some good news because this was one stock that was up almost 5% in such a downbeat market because the numbers were ahead of street expectations and the company also saw better than expected volumes and lower than expected costs. Nigel has more details on this one. Nigel.
Well, that's right. Ramco, even after today's pullback in trade, the stock is still down close to around 10% in the last 1 year or so. Tells you the kind of underperformance that we've seen from this cement major in South India. Remember, the backdrop was such that both in South as well as East India, where they have exposure, you have cement prices that are under pressure. But what worked for them, and the reason that they came in with an EBITDA number was better than what the street was working, was that the volume degrowth was close to around 2.5%. The street was bracing for a 5% degrowth out there. The second factor is the power and fuel costs came in much lower because of their focus on green energy, focus on WHRS, and also they started using their wind power captively. The operational performance was good and the street liked it. And the kicker was that they're sitting on a net debt of close to around 5,000 crores. But they've already said that out of the promised 1,000 crore non-core asset sale, they've already done 350 crores. So in the coming quarter, the net debt number will look even better. Now they're at around 24 million tons and they're on the way to around 30 million tons and they have the ability to add capacity and minimum possible capex. So Ramco Cement, an outperformer in today's trade.
Oh, absolutely. Stood out, Nigel. Thanks very much for that. Jay, I didn't get a market view for those who are sort of catching you for the first time today. And you've been calling for a market decline. For the Nifty, do we head to the 200-day, which is about 300, 350 points away from now, from here? What's the overall sense, if you can sort of put out the Nifty and the Bank Nifty view?
Yeah, that's right. Thanks, Prashant. See, I don't track moving averages as an I just look at price, but I have a rough idea where they exist. So I think 23,650 is an important level on price structure. So I think the 200-day moving average lies around that point. And we could see a short-term temporary bounce come through that will be slightly bigger than what we saw from the recent low of 23,816. But that will also get sold. Market needs to go down to the June 4th low of 21,830 odds and then complete a significant correction. Only then I'm anticipating a reversal in trend to come through. But even that, is subject to a revision. When it comes to the banking index, I'm anticipating the banking index to break down below 50,380. Once that happens, the declines there will be sharper, and that will probably lead the markets lower. But as always, wait for the levels to break through. That will tell the markets are doing what we are anticipating. No need to preempt the markets. The important support for Nifty below 23,650 is about 23,100, and another level is 22,600. But I don't expect that to happen straight away. I'm anticipating some bounce to come through from 23,650, and then the markets to continue the sell on rise mode. And there's no change in that.
Those expecting a bounce, what is... Jay, thanks for that. The 200-day, by the way, on the Nifty is 23,530, about 100 points away from what where you were expecting the bounce. So Jay saying, well, there'll be a correction, there'll be a rise, and then there'll be another...
And then another leg down.
I think that for those hoping for a bit of a sort of pullback, I think that is a...
the dead cat bounce, as they say, right?
Okay, all right. Well, let's talk about Jubilant Food and Britannia as well, right? And Jubilant went up some 7-8%. Britannia, of course, was under pressure sharply. Mangalam is here to recap the earnings and the market reaction to it. Mangalam, take it away.
Well, two stocks in focus, one top nifty loser, the other one was the top F&O gainer today. Jubilant Foodworks did extremely well, and that's on the back of strong internals coming in from the numbers. If you just take a look at the reported numbers, you know, they were largely in line with street expectations. Like-for-like growth coming in at around 3% as well. But the important part was delivery, which is about 70% of their revenues, showed a growth of 15.9% and a like-for-like growth of about 11.5%. This marks an improvement over the last few quarters of slowdown that we've seen in the quick service restaurant space, and that's why Jubilant Foodworks was rewarded by the street. On the other hand, no inspiration coming in terms of commentary from Britannia in their conference call, and that led to a further decline in the stock price. Remember, it was down 5% yesterday, around 5% today as well. The management has said in the near term, volumes could perhaps take a bit of a hit as the company goes into a high base of volumes along with reduced grammage as inflation increases as well. So they'll be very careful of the price-volume equilibrium over the next couple of quarters because demand is not as robust as it was in the past. More importantly, because of the high inflation and low volume outlook, could there be a risk to margins is something that the street is fearing as well. And the company has taken some calibrated price hikes in a few categories and channels, but important to monitor that situation along with competition and consumer sentiment at large itself, and as a result of which there was a big decline on Britannia today.
All right, thanks very much, Mangalam, for that. So that is, tail of two stocks, Jubilant and Britannia, one up, one down sharply. Gurmeet, very quickly, if you want to weigh in on either of these two names?
So Jubilant is part of our investment universe, I think. So while the like-to-like growth was good, if you see even the numbers, their delivery volume went up, but dine-in was negative by -5%. So my sense is, and these numbers are good considering that other QSR players reported pretty subdued set of numbers. So this entire space, Prashant, we've been discussing, the total market cap of all listed players is 60,000 crores. Right, which is less than a large size pharma company as well. So there is scope. It's just that we are facing some headwinds, and I think more than the urban consumption slowdown, it's the basket also which is changing. So there's obviously some tapering off which has happened in terms of demand, but also the consumption basket is changing. Jubilant Food, another particular point is that the stores which age, which complete 2 or 3 years, their average daily sales are around 80,000 to 90,000 rupees a day. So as because they're adding more stores and more stores age, all these metrics, which is like-to-like numbers, the same SSC, they don't longer, disclose, but all metrics will improve. And that's why I think I'm pretty constructive overall on this space. In our watch list, we have Westlife and Jubilant.
Okay, all right, got that. So Jubilant turning out a good performance after many quarters. Well, thank you very much, gentlemen, for joining us today. Good to get that perspective from both you, Jay, as well as Gurmeet. We'll catch up with you again soon. Right now, a very quick break. Come back on the other side, and then we'll get you all the top corporate voices that we gathered during the course of the day, along with the key events to watch tomorrow. Welcome back. Let's straight away get to the top corporate voices that we had over the course of the day. Asian Paints management says that the third quarter will be impacted by a high base and no surge in demand, as well as an urban consumption slowdown. The management adds that lower raw material costs and price hikes implemented in the second quarter will actually aid margins in the second half, but they're guiding for the margins to be at the lower end of their guidance band of 18 to 20% by the end of the year. The management also says that the buyback option is on the table, but it's not the first one they're looking at right now. As of now, they'll focus on improving the company's fundamental performance.
Well, we also had the Hindalco management with us, and they told us that aluminum prices will remain firm owing to demand-supply dynamics, as alumina prices are also at multi-year highs. Management expects copper business EBITDA to be between 600 and 650 crore rupees per quarter. On Novelis, they say that EBITDA per ton will hold around the $500 mark. They added that they have lined up a $4 to $5 billion capacity expansion program in India, which will be funded via a mix of cash and debt.
Shree Cements guides for a stronger performance in the second half of the current fiscal as volumes increase, pricing improves and costs cool off. The company projects a 5% volume growth in FY25 and double-digit growth in FY26. The company also says that it prefers building capacity through the organic route at around $75 per ton rather than acquiring capacity at much higher valuations.
We had the Bank of India management with us as well. They're expecting year-on-year growth of between 13 and 14% in loans and 12 to 13% in deposits for the full year FY25. The bank has a loan pipeline of 70,000 crore rupees and anticipates gross NPA ratio to remain below 4% and net NPA ratio below 0.9% by the end of this financial year.
All right, with that, let's start wrapping up. Vinny is here to get you a quick look into the key events to watch tomorrow. Vinny?
So yes, important events on the global front. In the US, we'll be keeping an eye out on the CPI data that is there. Eurozone, we'll watch out for the industrial production data, while in terms of China, we're keeping an eye out on the PPI data. A lot of global earnings that are there as well. Last leg of earnings. So we have a Tencent that is coming out with its numbers. Cisco, Alliance, as well as Siemens Energy will be reporting their numbers. Other than that, Biden and Trump will be meeting in the White House. That is going to be happening tomorrow, November 13th, but that will be post our market hours. IPO action that is happening on the domestic front. We have two listings coming up tomorrow. We have Swiggy as well as Acme that will be listing tomorrow, as well as we have BlackBuck, which is opening for subscription. Other than that, domestic earnings, we have Eicher Motors on the Nifty side that will be reporting numbers. We have NBCC, PI Industries, Brigade, as well as Vodafone Idea in non-Nifty companies. And other than that, we also have Apollo Tyres, Torrent Power, some of the other names that will be reporting their key numbers tomorrow. Also, let's keep an eye out on some other events on the domestic front. We have Jharkhand polls, phase 1 that will be starting tomorrow. By polls in the UP as well as in Wayanad. So keeping an eye out on all these events tomorrow.
Wow, that's an action-packed day and lots of earnings. It's the last stretch, but there is enough and more. Vinny, thanks very much. It's a wrap on this edition of Markets Forward. Thank you very much for staying with us. We'll take a quick commercial break. News and updates on the other side.